wait and listen to this very information. Now, like I have told you the last time, that we are trading with our stochastic, and then today we are also going to continue on our stochastic, and I'm going to tag this as part 3 of my video, because in a single video we cannot finish this information. Now we are going to look at stochastic combining stochastic with 4 hours, and what are the relation between stochastic of 4 hours and that of 15 minutes. These are what we are going to consider today. So we are going to go further into a shorter time frame to see how we can get an accurate entry. The essence of this is to get an accurate entry. Like I have told you in my previous video, that stochastic is a lagging indicator, but they tend to work nicely when they tend to mimic price nicely when it is being combined with price action. So these are what we are going to look at. We are going to look at the way we can combine this stochastic with price action. Like I have told you, that the only indicator that are leading in nature is price action. And now we want to see how we can combine our lagging indicator, which is stochastic, how we can combine this indicator to a leading indicator, which is the price action. So I want you to pay particular attention, and I want you to stay to the end of this video so that you can get better information about our trading system. And I want to give you a special bonus. I want to tell you how you can download our special indicator that we are using in forex, in index forex trading system. I want to teach you how you can download this, and I want to send it to you so that you can follow the trading. You can follow us on how we trade this system. So it is not enough for you to have those indicators without having adequate knowledge about how you can trade this information. And that is the essence of this video. That's why we produce this video, and that's why we are going to this video most of the time. So I wish you good luck if you can stay to the end of this video. So without any further ado, without any further hesitation, let's move straight into the video. Thank you for having me back in this video. Today we shall continue on our previous analysis on stochastic. How do we use stochastic in trading? In my previous video, I discussed stochastic in a different way. We look at stochastic from combination of 5 minutes and 1 minute chart. What are those things that we are looking for? We continue to consider stochastic that whenever we have the stochastic of 5 minutes and that of 1 minute speaking the same thing, they often react very fast. Now, the essence of doing this is to know when a particular move in a bigger time frame will start moving towards your direction, towards the overall direction. That is the essence of doing this. But today we are going to move a little bit away from the stochastic. That is, we are going to look at, from 5 minutes and 1 minute. We are going to look at 4 hours and relate our 4 hours to 15 minutes. That is, whenever we have the stochastic of 4 hours and 15 minutes speaking the same thing, and also agreeing to the previous time frame that we have mentioned before, what are the likely scenarios that we expect to happen. So without any hesitation, let's move down into the video. Now, if you look at this chart from here, this is 4 hours chart. I've moved down to 4 hours chart, and I'll be able to draw some vertical line to identify the area that we have an agreement between the 15 minute chart and that of 4 hours chart. Now, I want to tell you without any iota of doubt in me that whenever we have the stochastic of 4 hours and that of 15 minutes moving together, it's a drivers for us to know that at a particular time, 4 hours chart is going to start moving towards that direction. Now, that is the essence of this video. Now, if you look at this vertical line from here, you will agree with me that we have a green up. That is, let me magnify the chart a little bit. That we have a green up of this, we have a yellow up of this stochastic. That is the area that this stochastic change its color to yellow is the area that we are going to consider at this particular time. Now, if you look at this place again, let's look at this downtrend again. Let's see this area. The stochastic change its color to yellow. Now, what is so important? Why is it so important that we need to keep identifying those areas? Now, I want to tell you that I was taught by a mentor, which I actually bought his course in 2008. I was taught by Forest Commander. I don't know if you be hearing about this. Now, in his own book, he analyzed that whenever you have the stochastic of 4 hours and that of 15 minutes speaking the same thing, that is, we are going to have a run for about 16 hours or 4 hours. 16 hours or 24 hours. And this has actually been so over time. Now, this is what we are going to demonstrate in this video. Now, let's look at it from here. This is where we have the first one we have here. This is where we have our stochastic moving towards changing its color around here. Look at this place. The stochastic change its color around this place. It changes its color around this area. It changes its color around this area. So this is where we are going to lay our emphasis. Now, because I have told you that whenever you are dealing with stochastic, you should always deal with stochastic with price action. There is nothing you can do is to look at your stochastic. Why? You are having a change in prices. That is when you will see the reaction of your stochastic changing up. Now, if you look at this chart from here, you will agree with me that basically the price has changed to an uptrend. That is, from here we have an engulfing pattern around this place, which is this very candle that we have here. This candle eventually engulf at this area. So this is an area that we should be looking to take our uptrend. But we cannot take this uptrend without seeing an agreement between the stochastic of 4 hours and that of 15 minutes. Now let's move down to 15-minute chart. We are on 15-minute chart now. Fine. Now this is the first horizontal line that we drew around this place, and this is the area that we have a change of we have an agreement between the two area, that is within the two stochastic of 4 hours and that of 15 minutes. Now if you look at this place eventually yellow up. Look at it from here. Immediately it yellow up. We continue to see a run up. Now if you look at this one, if we compress this chart and calculate 15 minutes chart, we calculate the total candle after we have an agreement between the stochastic of 4 hours and that of 15 minutes. Let's calculate the total candle and see how many hours that this eventually run. So this is about 50 candle. This is about 50 candle. Now, if I'm bringing out my calculator, I want to bring out my calculator from here. You will agree with me that 15 minutes, so we want to calculate times 50. So we want to know the minute and the hours of time that this eventually move. I'm sorry about this. The minute, 15 minutes, 50 times 15. So this is going to give us, this is giving us 750 minutes. 750 minutes. Now, if I'm dividing this 750 minutes, I want to know the exact hours so that this has actually happened. So this gave me about 12 hours, 12 hours, 12 hours, 12 and a half hours. That's what I literally have, 12 and a half hours. So this is to tell you that whenever we have an agreement, so the essence of doing this, let me just explain the essence of doing this to you. The essence of doing this is to identify when there is going to be a particular move in a bigger time frame. When are we going to have a move? That is, when are we going to have 4 hours candle making move? That is the essence. Now, if you look at this crossing that we have at this place, look at this crossing from here. Do we agree with me that this cross of stochastic that we have around this place is at the area that we have the prices moving above the 240 moving average. So this is a typical uptrend. So at this juncture, you don't look for a downtrend. This is totally wrong for you to start looking for a downtrend around that area. Now, if you look at this place, look at it from here. Immediately, we have a cross from here. Look at the move. Although there are a lot of shopping candle around this place, you're going to have a lot of shopping candle around here. So while we are having those shopping candle, that does not mean that the price is going to move down. But look at it from here, because we have identified an overall direction. And for the next 12.5 hours, look at what happened from here. This is eventually what we got. Now, why am I exposing this information to you? The reason why I'm exposing this information to you is for you to be able to have patience while you see those two agreements. Though, like I've told you, stochastic is a lagging indicator in nature, but when we combine it with price action, it mimics price action very nicely. Now that's what I want you to understand. It mimics price action very nicely. Now let's calculate the pips that we have from here. Let's calculate the pips from here. I want to know how many pips that we are having from here. So this is 153 pips. We are 153 pips ahead. Now let's move back again and continue to see those areas that we have identified. Look at this from here. Look at the agreement from here. Look at how it moved from here. So from here now we can still get some decent move. Now let's move back again. Let's move back again and continue to see what are those areas that whenever we have the agreement between the stochastic of 4 hours and that of 15 minutes, what are those things that we are talking about? Now look at it from here. If you look at it from here, look at it from here. This is where we have the agreement. And this is where we have our candle, our stochastic turning to what? Turning to yellow. So immediately we have this from here. What do we have? We have a rundown. Look at the price out. It run down from here. Though the price has not crossed below the 240 moving average, but there are agreements between the stochastic of 4 hours, which is what we have from here. Look at it from here. This very area is what we are identifying. So there are agreement between the stochastic of 4 hours and that of what? And that of 15 minutes. Then what do we have? We have a very pretty run down to a downtrend. We have a pretty good run down to a downtrend. So this is exactly what we have from this area. This is where we have it from this area. So this is what I'm trying to identify from here. So let's continue to move back. Let's continue to move back and continue to see how we can identify our stochastic when there is a change of direction. We can identify our stochastic when there is a change of direction. Now look at it from here. Now look at it from here. This is what we have previously. So let's move back a little bit and continue to see those areas that we can identify our stochastic when there is a change of direction. So I'm still moving down. Look at it from here. So I have to compress the chart so that we can identify it clearly. So I'm still moving down to that area. Now look at it from here. This is where we have the agreement from here. Look at, we get the agreement from here. You see how the move was so pronounced. Look at it from here. Now, if I have to calculate from here, let me pick it up again from here and calculate how many candles we have from here. This is 120, let's say basically 130 candles, 130 candles. And this gives me about 286 pips. That's what we have. This is what we have for a whole day. Look at it from here. Immediately, the agreement come up. This is what we have for a whole day. Now, this method of trading is not as good for binary options. It's not as good as for binary options, but it's good for forex trading, whereby you can allow your trade to bring it for a very long time. Now, let's calculate the timing. Let's calculate the timing. I'm still bringing out my calculator from here. So we have 130 pips. 130 candles, 130 candles times 15. So we just want to know the minutes times 15. So we are going to divide this by 60 and we're going to see what this one, how many hours that this has taken. So this has taken 33 hours. 32 hours and a half. So this is what has taken this trade. That is from here. So look at it from here. From here now, we are having, because it overlapped to the following day. Look at it from here. So 24 hours plus another what? Plus another hours that we have previously from here. So these are what we have been having. Look at it from here. Immediately we have that cross. Immediately we have the agreement between the 15 minutes and that of what? And that of 4 hours. So we often experience a very serious move. So if you are the type that love trading with this oscillator, that you like to mess around with this oscillator, so what are those cogent things that you need to look at? What are those things that you need to consider? You need to consider your stochastic from 4 hours. You have to look at your stochastic of 4 hours and that of what? And that of 15 minutes. That alone can give you what? Can give you a very good what? A very good trading system. Can give you a very good pips for the day. Now, let's go back again. Let's continue to move back again and see those areas. Look at it from here. Are you seeing this from here? Look at where we have the move, where we have the crossing, and that crossing from here. If I calculate the move from here, this is probably going to be, let me calculate it from here and take it to this place. This is about 66 candles. So if I'm multiplying 66 candle, let's say I'm taking out 66 candle multiplied by 15. So I want to get the number of minutes that this happens. So divided by 60 minutes. So we want to get the number of hours. So this is going to be 16 and a half hours. From here, it takes us 16 and a half hours. Now, the essence of these 15 minutes and 4 hours agreeing together is that it will allow us to take a longer trade. I mean, it will give you a confidence to do what? To put your trade in what? In that direction. But now, there is another thing in which I would like to point out. For you to be assured, for you to be clear, for you to have more confidence, rather, let me use the word confidence. For you to have more confidence, what you need to take note of is that you must see that your stochastic in 15 minutes has crossed what? Has crossed the 240 moving average. And there are 3 things that you need to take note of. Number one, your stochastic must cross the what? Must cross the 240 moving average. Number two, there must be the stochastic of your 15 minutes must agree with that of what? With that of 4 hours. Then the stochastic of your 4 hours must be ready to move. Your stochastic of 4 hours must be ready to move. If there are no agreements between those directions, that means there will be what? There will be no trade. That is, the stochastic of your 4 hours must be what? Must be ready to move towards that direction. Number two, you must do what? You must see an agreement between the stochastic of 4 hours and that of what? And that of 15 minutes. Number three, your price must do what? Must cross above the 240 moving average for you to take an uptrend, or below the 240 moving average for you to take a downtrend. So those are the things that you must put into cognizance before doing what? Before taking a trade. Those are the things that we must consider before taking a trade. Now let's take, for example, from here. Look at it from here. I will not take this trade. Look at it from here. I, as a trader, I will not go against this line. I will not take this trade because I know that basically when the price moves to this 240 moving average, it's going to do what? It's going to be repaired by 240 moving average. So because of that, I will not consider this as a valid trade. Now let's look at those areas that the prices continue to make U-turn and see what happened to them when it is not in that direction. Look at it from here. Look at the move from here. If you look at this move from here, it does not do what? It does not come to this area. Because it does not come to this area, we cannot do what? We cannot take a counter trade around this area. It does not come below, the price does not move below this area. So this is not a valid trade. We are not taking this at all. It's not part of our system. Our system is to stick to what? Is to stick to an uptrend direction. Our system is to look at the trade in an upward direction. We are not interested in looking at the trade in what? In a counterweight direction. This does not work. This is going to give you a lot of problem. Now let's take, for instance, you continue to ride your trade from here. Probably there's an engulfing pattern around this place. You ride it from here, and you think that, okay, as soon as this is moving, fine, this is going to come, it's going to do what? It's going to come down to this place. Who tell you that it will not come down? It might not come down, or it may come down. But for you to be at the safer end, you need to take your trade. Look at it from here. Even I have to shift this a little bit backward. This is the entry. Look at the entry from here. So we take our trade from here and we ride it probably to the end of the day. This line is the end of the day from here. So oscillator like stochastic, like I have told you, it mimics price very nicely. We don't go against the direction. Now let's go back again. Let's continue to move back again. Let's see this area. If you look at this area again, look at this very area again. You will agree with me that immediately the price comes to this place, what do we have from here? We have prices going up. But because the price is already up from here, we cannot take a counter trade. So we don't need this trade from here. What we need now is for us to see the reaction of this stochastic, the reaction of the price on this what? On this 240 moving average. As soon as we see the reaction of price on the 240 moving average, then we know that, okay, fine, this is what we are going to do. We are going to look at what? We are going to see if the 240 moving average is going to repair the price. Now, you don't need a lot of indicators. You don't need a lot of, how do I call it? A lot of trading packages for you to be able to trade this. It's just you and your word and your eyes. There are no substitute for facial values when you are trading forex trading or you are trading any form of trading instrument. There are no substitute for your facial values. That is, you have to look at it very well. You have to be able to identify those areas that needs to be identified. You have to be able to identify those areas that we consider as what? As an order to the market. Now, if you look at this place now, basically from this area, now let's go back from here. You will see that if I have to take a trade from here, I am not going to go up. I am not going to go up. What I'll be looking for around this area, is where my stochastic of 4 hours and that of 15 minutes we agree. Now let me pick up this from here. I'm picking it up from here. Now we have a cross down around this area. Then we want to take a trade because we want to look at this trade. Now let's check the date from here. The date is on the 6/10, which is 13 hours. So let's move back to 4 hours and see. Now, good. If you look at, this is where we have this very area. Now let me take this out for you to be able to see what I'm saying clearly. I want us to understand this as quick as possible so that we will be able to identify those areas that need. Now, let's take for example from here. Look at it from here. Immediately, we have, I will take this trade. I will consider this trade as a perfect downtrend. Why do I need to consider it as a perfect downtrend? Because my stochastic in 4 hours, 15 minutes has already crossed. And prices has moved below what? Below the 240 moving average. My prices has moved below the 240 moving average. So this is a pretty good area to consider a downtrend. You cannot consider a downtrend where prices are still above the 240 moving average, even when you have what? When you have your stochastic in 4 hours and that of 15 minutes agreeing together. This is not a valid trade. Until you have a cross of your 240 moving average below the 240 what? Below the 240 moving average. Now let's go back to 15 minutes. Let's go back to 15 minutes. Your 15-minute chart. Let's go back to 15 minutes. So our 15-minute chart is now still on 15 minutes. Still still moving down. We are still moving down. So we want to make sure that we have a very good run. Look at it from here. Now, this is my entry. Look at my entry from here. Because my 15 minutes has crossed below the 240 moving average from here. Look at it from here. So I am going to have what? I'm going to have a very decent what? A very decent move to the downtrend. So this is how we take our trade during time of day. This is what we consider during time of day. Those are the things we are looking at. Look at it from here. Look at the trade from here. So this is a perfect entry. Look at a perfect entry from here. Now, if I'm calculating this, because the essence of telling you about 15 minutes and 4 hours is that is when you have a very bigger or a long time move during time of day. Now, when both of them agree together. Now, let's look at it from here. This is probably going to be more than 8 hours, if I'm not mistaken. Now, it's even more than that. Look at it from here. This is about 80 candles. 80 candles. So I'm calculating my 80 candle from here, 80 times 15. So I want to know what is the meaning. So I'm having this divided by 60. So I want to know the number of hours that this will do. So this is about 20 hours. So this is about 20 hours. So we don't have any great method than a simple method that will give us a very good trade. We don't have to continue to inculcate different form of trading techniques that will not work. Just look for your 4 hours and your word and your 15 minutes to speak the same thing. That is the stochastic of both to speak the same thing. And now for you to take a trade, that is for you to do a counter trade in an uptrend like what we have from here. Look at it from here. This is an uptrend. Because if you look at this place now, it's still the 240 is still up. But we can take a counter trade. How do you want to take a counter trade? We can take a counter trade in the sense that we have to allow our 4 hours, our 15 minutes time frame to do what? The prices in 15 minutes to do what? To move down, to cross below the 240 moving average. These are what is going to give us a perfect information. It's going to give us a perfect entry. Look at it from here, like what we have from here. Immediately those ones come down. Look at the move. Immediately we have this. Are you seeing the move? Are you seeing the way they go? So the prices are moving towards our direction. Things are working towards our direction. So you have to pay more attention to this. But now, another thing I want to chip in is this. Now let's now relate this to our 1 minute and 5 minutes and see how we can take our entry, can inculcate our entry in that aspect. Now let's go back to, now this is our what? This is our 5 minutes, our 15 minutes. Now, after we have identified those moves, now we are going back to 15 minutes. Now let's see how it works from here. I'm still going back to 15 minutes. I'm still going back. I'm on 5 minutes sharp now. I want to see where those areas are really, things are really working up in those areas. Now we're still 5 minutes sharp. 5 minutes sharp. Very good. Now, immediately this happened. Do you see this? You see where we got our entry in 5 minutes. This gives us a perfect entry in 5 minutes. Now, when you take this trade, you will agree with me that immediately you take this trade, you are going to be in money. There are no point. You just paste your entry. What you just do, paste your stop loss, and you can paste it at the top of this place. And when the price continues to move, you continue to trade your stop loss. By the time the price got to this place, you put it at your entry. You are allowed to keep moving. Look at it. It has been in a descending way. Look at the way it's going. So you continue. You allow the price to breathe. The essence of allowing the price to breathe is that you have seen an agreement between your 4 hours and that of 15 minutes. Once you are able to identify all these, I want to assure you that you will have a decent way of trading. You have your trade will be what? Will be perfect. But the problem is this. Majority of traders cannot wait. We cannot wait until we see those move. That we are always in an hurry to take a trade. We are always in an hurry to take a decision. We are always in an hurry to see our trading getting into money immediately. This is not how it works. We need to wait and see the price action at that particular area before we take our decision. Trading is good, but it is risky if you allow your emotion to override your decision. You must not allow your emotion to override your decision while trading. Now, with this little information that I'm giving out to you, I believe that you'll be able to do what? You'll be able to know how to do what? How to identify those profitable areas. Like I've told you in the beginning of this lecture that I want to give you what? I want to give you a bonus. Now, if you subscribe to my channel and hit the notification button and let me know, just write I subscribe. I am going to give you what? And once you write I subscribe, just tell me I need the software. I need the Stochastic software. Then I will see the way I can email you personally and send it to you. Now, if you have this Stochastic within your trading arsenal, it's going to assist you. Don't overload your chart with what? With a lot of indicator. It's not going to help. That's not how we trade here. We have to make things simple as much as possible. That's the way we look at our trade. We make it very simple. So we don't allow what? We don't allow a lot of indicator to do what? To distract our trading decision. So if you need this video, if you need this software, subscribe to my channel and let me know that you have subscribed. I will give it to you free of charge. So I want you to watch these two videos. These are the videos that will lead you to this last Stochastic video. This is the part 3 of my lecture on Stochastic. So, and I want to thank you for you have taken your time at this time, and I wish you good luck for your effort. And I say thank you.